Global crude prices have plummeted to record low levels, but it may be a while before consumers of petrol and diesel start reaping the benefits, or there may not be any benefit at all, as the call to cut duties or raise them is taken by the government. The fuel price cut depends on a number of factors. Now, duties and taxes charged by central and the respective state governments form over 50% component of petrol and diesel prices, and it is up to the government if they reduce them or hike them, as the state and central governments have already lost the excise with billions of rupees due to the lockdown. Now, it will be difficult for them to let go of the excise revenue from petrol and diesel sales. Also, historically, Indian governments have not lowered the petrol and diesel prices in comparison to fall in global crude oil prices. Brent crude prices traded as low as $28 per barrel in 2015, but the retail prices were unaffected. Also, Indian currency rupee has weakened against the dollar, with the dollar trading above 76 rupees 50 paise to the greenback. Now, the weak rupee has already made the imports costly, and India imports over 80% of its crude. The weak rupee is offsetting large parts of gains made as a result of lower crude prices. Oil marketing companies or the retailers also see no merit in reducing oil prices, as demand is already curtailed and low prices won't result in higher consumption of petrol and diesel. Petrol and diesel, being essential commodities, will be used by vehicle owners even if prices are not reduced. Now, also, crude is purchased about 2 months in advance based on prices prevailing at the time. Any price reduce if any, will not take place before May or June. In Delhi, a litre of petrol is currently priced at 69.59 rupees per litre and diesel at 62.29 rupees per litre. In Mumbai, petrol is selling at 76.31 rupees per litre and diesel at 66.21 a litre. In Chennai, a litre of petrol costs you 72.28 rupees a litre, whereas diesel is now priced at 65.71 rupees. In Bengaluru, petrol is now selling at 73.55 and diesel at 65.96. In Hyderabad, petrol pumps are charging 73.97 rupees for petrol with 67.82 for diesel. In Kolkata, petrol pumps are charging 73.3 rupees for petrol and 65.62 rupees for diesel. Brent oil prices have collapsed around 60% since the start of the year, while the price of diesel has fallen only 10% and that of petrol by 8.5% from their peak rate on the 11th of January. Now, oil refining companies have also lost business as the demand for gasoline and jet fuel has plummeted even in the export markets. With better margins possible in domestic market, oil marketing companies would strive to maintain prevailing price levels as long as possible. So even if U.S. crude oil futures turned negative on Monday for the first time in history, or even after the WTI crude trading at more than half of the earlier levels, the retail prices of petrol and diesel in India may not be affected. Our diplomatic correspondent, Sadan Sybil, gets us a report on who the decision would impact in India. Listen in.
In a significant and surprise development, the oil prices have gone in negative territory. The West Texas Intermediary is at minus 36, which is historic in every sense possible. This is primarily because of COVID. Half of the world's population is in some kind of lockdown and the demand for oil has decreased. This is going to majorly impact countries like Saudi Arabia and Russia, who have oil-based economy. And also, this is going to impact oil-producing companies that might go bankrupt. But by and large, a positive development for India. India, of course, imports Brent oil, which is still in positive territory. But positive for India, given the fact that India imports roughly 80%, in fact, more than 80% of its oil needs. We also know it is going to have impact on India's trade deficit that is significantly going to reduce, also on rupee and inflation. Inflation expected to come down. But India hasn't transferred the oil benefits to the population much. We know that the excise prices were increased in the end of March month. Also, we know that the Indian government is expected to get revenue from this increase. But by and large, due to COVID, several sectors are seeing impact, whether it's aviation or whether it is crude oil, and this is going to majorly change the world. With video journalist Neeraj Patel, Siddhant Sibbal for WION in New Delhi.